everyone, this is the video for scenario number 6, which starts on page 83 of the publication 6744. So that is here. It's with Quincy and Marian Pike, page 83. And just so you know, to start off, this is just a really fast run through, so please either slow it down or pause and work through it yourself just so that you really understand. Just because this will be really quick. So to start off, we will put Quincy's information in by just selecting to start a new 2017 tax return. And Quincy's information is 31700, and the 4 X's just mean put in whatever number you want, so I'm just going to do 5555. All right. And this important message, you can just click continue. So in the interview notes, it says that Quincy and Marian are married and want to file a joint return. So just to make sure, I want to go to, in the publication 4012, if we go to page B8, then this is the decision tree for the filing status. So to just make sure that they can do that, here we start here. Were you married on the last day of the year? Yes, they were. Come here. Did you and your spouse live apart all of the last 6 months of the year? No. So married filing jointly or married filing separately. Since they want to file jointly, then we'll put that. Great. Also, you could use this filing status wizard if you needed help and didn't want to look in the publication 4012. It would help you with the same thing. So now we will just put in the information, and from the intake and everything form, as you can see, intake and interview form, here's all of the information. I'm just going to use it from the book. And he is 1961, he's retired. And then we just want to check and make sure that none of these boxes, we just look at that, none of them say that he's here. However, if you look at here, it says that they wish to contribute $3 to the presidential election campaign fund. And that's kind of a weird thing. Most people don't actually contribute, but you'd find it on page 3, part 7, question number 2. And Quincy and Marian actually both want to give $3 to the fund. So we will click that they want to contribute $3 to the fund. Now we'll put in Marian's information and her social security number, her date of birth, 1961. Oh, don't know why that just happened. Alright, and she's an admin assistant. Great. Again, she doesn't have, we don't need to check any of these boxes for her except for the $3 presidential campaign fund. So now their address, and I'm just going to put Provo zip code, and for their daytime telephone, you can put any number you want. Great. That is their personal information. Now for their dependents or qualifying persons. So as we can see from their intake form, they do have a dependent listed, Lucas. He's their son, he's 16, so we also just want to make sure that he really does file, that they can claim him as a dependent. So if we come back to the publication 4012 and look in section C, that is where you figure out the dependents and everything. So we can just follow these questions. So the child must be your son, daughter, stepchild, etc. He's their son. Great. He is under age 19. Child must have lived with you for more than half of the year. Yes. Child must not have provided more than half of his or her own support. That's true because the interview note said that he had no income. Child isn't filing a joint return. No, he's not married. And the child is not a qualifying child of another person. So he can be Quincy and Marian's dependent. So, yep, they have a dependent, and his name is Lucas. And the date of birth is February 3rd, 2001. Social Security number 316. Great. He is their son. He lived with them for 12 months. And none of these situations are true, so we leave them unchecked. Alright, and that is all they have for dependents. Alright, so now let's look at the money you've earned. So there are a couple of different ways that you can add income in any form. So one of them is this Guide Me, and that's where it will ask you specific questions of like, oh, do they have a W-2? Do they have this form? And you can say yes or no. Or you can enter yourself, and I'm going to show you both sides of it. There's also a third option where you can just enter in, search for the form itself. So I'm going to show you all three methods throughout the scenario. So I'm first going to hit Guide Me. So it just starts with W-2s. Do they have any W-2s? Yes, they do, because right here, ta-da, W-2 for Marian Pike. So this is where I'm going to take all the information from to fill out the W-2. So let's get back to it. Yes. So this is Marian Pike's W-2, and the EIN is found just right here in box B. So 100, and they just filled it in, auto-populated. So wages and tips. All of these are just found exactly. They correspond with these boxes. So line 1 is this box, 2, 3, 4. So just follow it exactly as it shows up on the W-2 itself. So box 1 has $13,950. Box 2 is $450. As you can see, these 4 boxes auto-populated, but they're in red because they want you to check them because they can be different from what's in line 1. And in Marian's cases, that is actually what's true. So her Social Security wages are $14,550, and then this automatically changed, and it matches, so that's great. And the Medicare wages need to be $14,550 as well. That changed to $210, so we're good there. Alright, and then the next box that has something in it is 12A. And so that is D, and it has $600. She also has double D, and that's $65.60. And box 13 has a check under retirement plan. So I want to hurry and come back to these codes really fast. If you look in the publication, in the income tab, which is D, D6, that's the page I want to go to. Oh, this is gonna take a second. Sorry, guys. Alright. Don't know what just happened. There we go. So, W-2 reference guide for common box 12 codes. So as you can see, D, it says that it's a section 401k. And then double D is the cost of employer-sponsored health coverage. So the $600 that she took from the D, that's just to put into her 401k, and that's actually the difference between the $13,950 and the $14,550. And then the double D is just her paying for her health care, and I think in the interview notes it says that she pays for her and Lucas through her employer. So yeah, there you go, that's what those mean. And then we also have to finish out the state information. So as we can see from the bottom, the state wages were $13,950, perfect. State tax paid was $127.90, and the state EIN, sometimes it fills in, sometimes it doesn't, but we need to make sure it does fill in, so there we go. And that is it for the W-2. We hit continue. We don't have any other W-2 statements, so we just continue on. Now I'm going to say, so this is again through that Guide Me stage, but if you just click on the income button over here, this is what would show up if you, instead of saying Guide Me, you chose Enter Myself. So this just has a list of all of the different income forms that they could have. So moving back to our scenario, our next form is a 1099-R, and it's for Quincy. So let's find where the 1099Rs are, and it's right here. So we hit begin, add or edit a 1099R, and we again just fill it out like we would for the W-2. So payer's ID, we find that right here in this box, so it's 4100, and then whatever number you decided to do. And then box number 1 has 17,500. This auto-populates, but as you can see from here, it's actually empty. But to B shows that taxable amount is not determined, and that's checked. So we need to follow that exactly how it shows. So we leave it blank and then mark taxable amount not determined. Alright, I'm just going to finish this out and then we'll come back to the taxable amount. So box number 4 has 1750 in it. And then box number 7 has a 7. And 9B has 12,500. Great. So this distribution code, there are a couple of different codes that show up. And I had to look this up, but also in the publication 4012, in the income section, there is this 1099R distribution code section to explain what these are. So for number 7, it just says a normal distribution. And if you go through and read this, it means that some of it could be taxable, sometimes it's not. So we have to figure out how much is actually taxable for Quincy. So that leads us to this part. Do you need to calculate your taxable amount? Click here for options. Great. So since there's nothing about like a public safety officer distribution in the interview notes, I figured that wouldn't be right. So I clicked on the simple general rule worksheet and figured out how to, and then you have this. I read through, Quincy does qualify to fill out the simplified method qualification. So in order to to fill out the simple general rule sheet, I didn't know how to do this when I first started. So I came to the 4012 and came to page D34. This is where it all starts, or I guess here. So this is what we've already filled out. And then here we can come to the simplified general rule worksheet on page D37. And this explained to me what we need to know for it, so you can read more up on this, but that's what we're filling out. So the plan cost at annuity start date, as we can see from the 4012, it says enter the plan cost shown in box 9B of 1099R. So that was the 12,500. And then from the interview notes, we know that this date of the annuity started on April 1st of this past year. And also from the annuity notes, the interview notes, it says that Quincy selected a joint survivor annuity for this payment. So April 1st, 2017, joint survivor. So those are two things that we need to know. So we check here, there wasn't anything about death benefit exclusion, and the age of the recipient at the start date. This note, if joint or survivor annuity, add ages of recipients. So that means that we have to add the ages of both Quincy and of Marian. So Quincy was 72, Marian was 58. So therefore they are 130 altogether. And the number of months paid in 2017, that just means the number of months that he got something out of it, so that was 9 because it started in April, and then we don't have anything for those two. So then we can click continue, and it shows us that the taxable amount was $17,137. So I actually want to explain a little bit more about where this taxable amount came from, because it kind of just did its magic, showed it up on its own. So I looked up this PDF from just the IRS itself. This is the simplified method worksheet. This is exactly what TaxSlayer Pro just did. So line 1, you enter the amount or the total pension payments, which was a $17,500. Enter the cost was $12,500. Enter the appropriate number from table 1 or from table 2. And after researching more, it's table 2, and we found that their combined ages was 130, so we would enter 310 in line 3. Divide line 2 by the number on line 3. So we would divide 12,500 divided by 310, and then we multiply that by 9 months, which is the step 5 right here. So in line 5, we would have 363, pretty much. And then we can move over to line 8. It says smaller of line 5 or 7, so we'd still keep the 363. And then we subtract that from from line number 1, which is 17,500. And we get 17,137 as the taxable amount. I know that this whole thing was really fast and maybe didn't make sense, but I just wanted to show that that's what was happening and that that's what matches here, the 17,131. That's how they got it. If that wasn't helpful, sorry about that, but maybe it was, because sometimes when people come into the lab and there's something I'm not really sure how to fill out, it helps me to actually see the form that the IRS prints out so that I can follow the logic behind it. So hopefully that helped at least somebody. So now we can click continue. We know that taxable amount is correct. We follow here, we filled out everything, so we don't need to worry anymore. There's no rollover or disability information or state information, so we click continue. Oh, they have concerns, and that's just because the taxable amount is not the same as the gross distribution, but we know that we did it correctly by following the worksheet, so we can click continue. All right, now from our, back to our scenario, the next income that we have is another 1099-R. So that comes from Essex Bank, so I'm going to put add form 1099-R. It is for Quincy again, and that payer ID is in the same location that I showed before. And the gross distribution is 4,500. Taxable amount is 0. So it's not just blank, but it's actually 0. But 2B still has checked marked the taxable amount not determined, so we're going to have to come back to that. Box 4 is blank this time, and box 7 has a distribution code of Q. So let's go back to our publication 4012 and look at what that code means. So if we come back to D42, this is again that 1099-R code, distribution code worksheet. It says Q is a qualified distribution from a Roth IRA. This distribution isn't taxable. Tax layer enters the distribution amount on form 1040, line 15A, but not 15B, which I'll show later. No further action is needed. So, because no further action is needed, I know for a fact that it's not taxable, so I'm not going to worry about clicking here for options and filling out a worksheet because there's no taxes for it. So we can just click continue. Oh no, they don't like that the taxable amount is 0, but we know that that's okay because the code was Q and we've looked that up, double checked, we're good to click continue. All right, now back to our scenario. The next form that they have for us is a Social Security Benefit Statement, or SSA 1099. So that's not a 1099-R, so we come back in here, but look, Social Security Benefits, that seems right. So I'll click Begin, and we'll just fill this out since this is for Quincy only. We'll put it in the taxpayers section. So it says generally box 5 of SSA 1099, so that's 15,600. Tax withheld is box 6, so 15,000 or 1,560. Taxpayers Medicare premiums. So that is this part. And if you go to the publication 40, you can go and in section D again, on page D45, it talks about SSA 1099 distributions and teaches us how to fill out this form. So taxpayers' Medicare premiums, the box says, enter the total of Medicare Parts A, B, C, and D. Repeat for spouse. So it says here Medicare Part B, premiums deducted was $1,258.80. Part D is 0. So really we just have that Part B information that we need to worry about. So we'll put that in here. Alright, and Marian doesn't have anything, so we don't need to worry about this. And the lump sum payments, there isn't any information about that, so we'll just leave that as is. Alright, so we're good here. And our next item of income is our investments, so our dividend and interest income. So we could just come here. I also want to show how you can look it up. So if you just did something like this, you should be able to look through it and see, and actually it's not showing up, and I don't know why, but that's okay. But usually the form would show up as you can see it here. So I'm just going to click on it here because I can. So interest or dividend income. We're going to start with the dividend income because that's what's first on the scenario here, right here. So 1099 dividend. And click continue. So payer's name is the ABC Investments. And it's a joint investment because up here you can see that it says Quincy and Marian Pike, so it's both of them. And I'm just going to fill this out. You can follow it directly through. So box 1A has 342, 1B has 310, 2A has 85, and the next one is box 3, which is 72, and then box 6 is 15. And that's all we have for that, so that's pretty simple. And we can click continue. Add an interest and dividends. And then we know that we have, so the 1099 miscellaneous, all this is 0, so we don't need to worry about that, but we do have a 1099 interest form. And I want to point out that here, so there's interest income and tax exempt interest income. And the tax exempt interest income just comes from box 8 on a 1099 interest. And then this part is all other lines. So as you can see, we have box 8 filled out, so we'll have to do both forms because we have interest income of 110 and tax exempt interest of 150. So let's just start with the normal interest income. The payer's name is again ABC Investments. It's still a joint investment. Interest income box 1 is 110. Early withdrawal penalty $30. And everything besides box 8 is 0, so we can click continue. And then we'll add it again to get that tax exempt interest in there. So even though it's tax exempt, we still have to put it on the return just to show what that interest was. So I'm just going to put exactly what's in box 8 here, 150, click continue. Alright, so that is all of our investments for that, but so there we go. Next on the list though is the capital gains and losses. So this comes from form 1099B, and these are two different transactions, so we can't put them all together, we have to do them separately. But we can do that, so it's really exciting. So we come down to capital gain and losses. Click begin, capital gain and loss items. It's a joint return again. I'm just going to put ABC Investments. You can kind of describe it however you want in a way. So date acquired, that's going to be on, well, I'll just show you really fast. So we have date of acquisition is this 1B right here. Date of sale will be here. Then we're going to use our sales price and our cost. And then there will be one other question when it talks about sales price. It'll say what type is this, and when I'm talking about it, I'm going to be referring to this specific sentence. Short-term transactions for which basis is reported to the IRS, and then when we do the second one, it'll be that part. just so that you're aware of what I'm talking about when I'm filling it out. So, date acquired was September 1st of 2016, I believe. Yep. Date sold was, let's see, March 1st. Whoa, March 1st, 2017. And click here if it's a short sale. It didn't say anything about it being a short sale, and a short sale is not the same as a short-term investment. Short sale is something different. So because it doesn't say anything about it, I'm not going to click that. Alright, sales price. That is the box 2A, and that's $31.50. Select cost basis type. So this is what I was talking about with that sentence right underneath the title. So for the first one, it is reported to the IRS, so I'm going to click on that. The cost is on box 3, and that's $1,600. And then there aren't any adjustments, so we don't need to worry about that. And we can say save and enter another. So again, it's joint. We've got ABC Investments. Date acquired, the boxes are in the same area, so we just need to do that. And date sold. We sold it on February 1st. 2017. Sales price $3,200. This is not reported to the IRS, and the cost was $23.84. No adjustments on this one as well, so we click continue because those are only two capital gain and loss transactions. So we can click continue here. Alright, and I'm going to pause because, well, not pause, but kind of go through. Oh, hey, online they do have the Schedule D. If you have a hard copy, this Schedule D is not in your book. And when you take the test, it gave us this information, so I had it pulled up here. But hey, online, this is perfect. They have the Schedule D capital loss carryover. So this is just saying that they had capital losses last year, and you can't. You can only deduct up to a certain amount of capital loss each year. It's $3,000. And anything beyond that will just carry on indefinitely until you have capital gains to offset it. So here, I mean, they have all this information. We don't need to do much with it. We just need to know this bottom line here and know that it's $450 was their long-term capital loss carryover. So, whoops. I'm going to come back here and come to the other capital gains data, including in capital loss carryover, because that's what we want. So I'm just going to come down to this long-term loss carryover from 2016, and it was $450. Enter as positive number, continue, and we are good there. So now, the last part of their return is, because we have no other income information on the return and we just have the test questions left, but on their interview it talks about health insurance, so we need to go and do that. And they did have health insurance at any time during 2017. And it states that Marian and Lucas had ME, or minimum essential coverage, and then Quincy had Medicare, which is right here, which is considered minimal essential coverage all year. So they did not purchase healthcare or insurance through healthcare.gov or the marketplace. It would have had to state that specifically, and we would have had a specific form for that. And these are their household members, no one else, and their entire household was insured for all 12 months. All right, we've finished the federal return, so let's continue to the summary, and we can walk through their 1040. So here they have the 1040, and I'm just going to walk through some of these boxes. So here, this is from Marian's W-2. This comes from the interest, the 1099 interest, that's box 1, and then this is the box 8. This comes from 1099 dividend, that's box 1A and 1B. This comes from the capital gain. stuff. So this is both of these capital gains, but then also minus this 450 that came from the loss carryover. This is their IRA distributions, which came from the Essex banks, and since we had a Q code, it's zero amount taxable. This is the pensions, and we discovered that the taxable amount was $17,137. And then he also had Social Security benefits, and this amount was automatically populated. We didn't have to do a form for that or anything. So then it adds that up. This penalty here was from the interest, early withdrawal in the interest form, and they get to deduct that. Now here, so here this just carries over. And alright, I'm going to hurry and show you a little bit I made. So here we have either itemized deductions or the standard deduction. They take the higher of the two. I've done this before, so I know this is the wrong number. So I had a feeling that I put their information in wrong. So I came back to the basic information. Maybe you guys had caught this and you obviously couldn't tell me. But I put Quincy's birth year wrong. So his birth year is actually 1945. And that will make a difference. So we have Marian's birth year right. She's 1961. So I just wanted to hurry and fix that really fast. Nothing else was affected by that, just that area. And I'll show you why in just 1 second. So we can go back to the summary print view. And haha, look, that changed. So here they can either take the itemized deductions or the standard deduction, whichever is higher. In this situation, we didn't actually have any itemized deductions to even deal with, so we know that the standard deduction is what we took. So it says C's left margin, and here, Marian filing jointly is $12,600, but here it's $13,950. So you're probably thinking, Clarissa, you did it wrong, and I'm going to tell you I did not, and I'll show you why. So if you come into here and look on tab F, then which is deductions. Oh look, it's the standard deduction worksheet for dependents. Okay, so here you can look and see that the standard deduction is different for people who are blind or people who are 65 and older. And since Quincy is 72, he qualifies for a higher deduction. So here you would mark Quincy, you would say you were born before. The spouse was not born before 1953. So the total number of boxes checked was just 1. So let me come down here, married filing jointly. With 1 box, it's $13,950. And look, $13,950. So we did it right. But that's just why that's a little bit different and why it may seem weird. So here it just kind of does all of the magic and the math. This comes from, so that's a foreign tax credit. That's because they paid foreign tax on their dividends. And then this is the child tax credit. So Lucas qualifies as their child, and they get $1,000 credit because of that. And that's just automated or populated automatically. So we come down to here. We have their federal withheld. That comes from the W-2s and all of Quincy's 1099s. And then the earned income credit is right here, and there you have it. So let's go to the questions in the scenario and go through and answer that. So what is the total taxable interest shown on line 8A of Form 1040? All right, line 8A, that would be on page 1. Line 8A, taxable interest is 110, so that would be B. That's the answer. For 19, we have how does code Q on Quincy's Form 1099-R from Essex Bank affect the return? We've talked about this. The entire distribution is not taxable, and we see that here, zero amount is not taxable. All right, number 20, what is the amount shown on Form 1040, line 13, capital gain or loss? So let's go to line 13. It's $2,001. So that would be D. And again, if you hadn't had that capital loss schedule, you probably would have selected B, but because this capital loss carryover came through, subtracted $450 and took us down to $2,001. So how much of the $17,500 gross distribution reported from 1099-R is taxable in 2017? Well, let's go look. That was from our simplified worksheet. So that's $17,137. So you would just write that amount right in here. Is Quincy's Social Security income taxable? Let's go look. So we have Social Security benefits, $15,600. The taxable amount is $4,730. So yes, a portion of the Social Security income is taxable. So that is A. Are the Pikes entitled to claim an earned income credit for 2017? Well, there's a couple ways we can know this. So the earned income credit is on page 2. It's right here, earned income credit, and they obviously have that. That's automatically done by TaxSlayer Pro. We don't have to fill that out. So obviously they qualified because they have an amount, but let's talk about why really fast. There's an entire tab in publication 4012 about the earned income credit. So I'm going to go to page I3. Because that is where these eligibility rules are. So we can go through and look at this, and here it says the earned income and adjusted gross income are both in this. So they have one qualifying child, so right here, and they're married filing jointly, so it has to be below $45,207, which it is. That's the number that they're talking about. So since $38,000 is less than $45,000, they are good there. And then do you and your spouse have Social Security numbers that allow you to work? Yes, go to step 3. Is your filing status married filing separately? No, go to step 4. Are you a non-resident alien? No, go to step 5. Are you they don't have enough foreign earned income to fill out that, so they're not filling out that form, so they say no. Step 6, is your investment income more than $3,450? No, go to step 7. Are you and your spouse the qualifying child of another taxpayer? No. So then they can get it, and yeah, that's how. So that's a little bit of that. Oh yeah, so then that means that yes, they're eligible for the credit. And then the last question is number 24. What is the total income tax withholding on the tax return? So we come back, and that is specifically talking about line 64. So this federal income tax withheld from the W-2 and 1099. So the reason why this could get confusing is if you're only looking at just the W-2 or just the 1099s. But this is the right amount because it adds both of them. So the number to put there is $3,760. So that is the end of scenario 6. I hope that makes sense to you. Please let us know if you have any questions. You are welcome to use this video, any of your notes, all of the books on the test, and good luck. All right, talk to you later.